You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon's Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Hello and welcome to FinTech Insider Insights. I'm David Barton-Grimley, right here at 11FS. According to the FCA, UK banks spend £5 billion a year combating financial crime, and yet fraud reports are still climbing. Federal Trade Commission data show that consumers reported losing more than $12.5 billion to fraud in 2024, which represents a 25% increase over the previous year. According to UK Finance, over £1.7 billion was stolen through fraud in 2023 alone. As digital payments become the default, fraud has also evolved with it. Scammers now use artificial intelligence, deepfake video calls, and emotionally manipulative tactics like romance scams to exploit a growing population of digital-first but fraud-naive users. So for bad actors, it's a golden era right now. But fintechs aren't standing still. They're turning that same technology into defensive tools, aiming to stop fraud before it even starts. And at the same time, if there's ever one thing banks have done well, it's mitigating risk. Paired with the agility and innovation of fintechs, the fight is far from over. So in this episode, we're unpacking the modern fraud landscape and looking at fighting fraud at the product build level, asking how product managers are thinking about the fight against fraud right at the very start of the product creation journey, and every step thereafter. So with all that in mind, let's introduce our guests. And first up, we have my 11FS colleague, Joe Colchester, Head of Product Pulse at 11FS. Welcome back to the pod, Joe. Please remind our listeners about 11FS Pulse and how it works and what you're up to.
Of course. Thank you very much for having me back. I'm very happy to be here again talking about fraud. So 11FS Pulse is a platform with over 16,000 user journeys from banks and fintechs from all over the world. And these go across different regions, different geographies, whether it's current accounts, business banking, investment platforms. We have thousands of these journeys, and they're all scored by our internal UX team. And so whether you're redesigning your onboarding or your payment flow, you can really see who's doing it best, and you can get inspired from them. Or you can just keep an eye on your competitors. So we have internal experts, but we also have recently launched a feature where we've brought in over 500,000 App Store and Play Store reviews, and we've dug into those reviews to do sentiment analysis. So we're also telling you what your users think of your product or different products around the world.
Awesome. And next up, we have a FinTech Insider debut for Tony Brancato, Chief Product Officer at Charlie. Thanks for joining us, Tony. Please tell us a little bit about yourself and what you do at Charlie.
Thanks, David. Great to be here. Thanks for having me. I've been in product development for a couple of decades in leadership roles at the New York Times, Amazon, a bunch of startups, and I'm part of the founding team here at Charlie Financial. Charlie is banking designed specifically for retirees in America for now. You have to be 62 years or older to sign up for Charlie. That's our retirement age. We started Charlie because we believe that a retiree today is both uniquely vulnerable to the scams that you're talking about, that you mentioned earlier in the podcast, and that we're also in a unique position to fight these scams with innovative products and systems that meet the retiree where they are in their lives, but also help fight back this tsunami of scams that are directed at them every day.
Awesome. It's great to have you on board. And last but not least, it's a welcome to the show for Monica Milares, CPO at BigPay. Monica, please tell our listeners about BigPay, what it does, and your role there.
Thank you, David. Thank you for the invite. So BigPay, basically, we are a neobank in Southeast Asia. We've been around now for about 7 years. So think about basically Malaysia, Singapore, Thailand, and we serve the digital native customers, but also the migrant workers and the travelers. So we provide a suite of solutions across the board. And then my role, I joined same part of the founding original team. And then I've been building the fintech as we go along, and now I'm the CPO.
Awesome. All right, and that's our panel. Let's dive in. So I kind of wanted to ask the both of you, Tony and Monica, for your views on just what you're seeing in fraud at the moment, because I think it's so interesting. You know, you're both in very different geographies and in some senses targeting totally different types of customer, but also providing in some ways very similar, services for those people. So, as I said in the intro, fraud is proliferating into all sorts of different types. Monica, let's start with you. What are you seeing out in Southeast Asia?
Yeah, in our region, we've seen a lot of account takeover for a while. We're seeing mules, we're seeing fraudulent card transactions. So we have like the plethora of fraudulent transactions. Probably what we haven't seen much are the romance scams.
Right.
That is not like the highlight here. It's more like the other type of fraudsters.
Gotcha. It's interesting. Just looking at a stat here, romance scams overall is up 14%, which is just phenomenal. It's incredible. But I mean, we can go into some of the other stats like impersonation fraud. So that's someone impersonating a police or a bank is down something like 38%. I mean, Tony, what are you seeing?
Yeah, on our side, I think we're seeing, unlike Monica, romance scams are big amongst retirees in America right now, unfortunately.
Oh, wow.
Just in the last 6 months, we've seen a rise in people calling in to say that they've befriended or are dating Elon Musk on Facebook. And then there's an investment opportunity with Tesla, and they just need to wire a few $1,000s as a signal of commitment, and then Elon's going to send them $50,000, and you hear it's a playbook, and you hear it over and over again, and then we try to convince them that it's probably not Elon Musk, and then they get frustrated with us, and so for at least certainly for retirees in America, the combination of a lot of people, there's a loneliness epidemic.
Right.
People are on Facebook all the time. And so it's unfortunately, it's very easy to make emotional connections with people and then misrepresent yourselves. And then the money flows from there.
Very vulnerable customers, I guess.
Absolutely.
Tony, how are you picking up on that? At what point is it when the fraud has taken place and they're saying, oh my God, the money's gone? Or is it, hey, I think I'm dating Elon Musk?
Certainly that's a flag. We think about fraud from multiple angles here, but education is absolutely at the top of the list. If you have to start warning folks about these scams because they're proliferating, they're changing every day. It's not just Elon Musk. We have Keanu Reeves, we have Sandra Bullock, we have a whole cavalcade of celebrities in the mix. But then also, or people, they think they're dating someone who is in another country, and they're going to fly into the United States and marry them, but then their car breaks down on the way to the airport. There's some really sad stories out there. But because we were at the front lines here, I think we have an opportunity we've created this feedback mechanism of as soon as we hear about a scam, we put it into our Fraud Watch newsletter, and we alert every one of our customers, even non-customers, about what's happening, and in the effort to try to just raise awareness. There's a stat that if you can let people know, if you can warn people about what a scam looks like, they're 80% less likely to fall for that scam. So we really believe that we can have an impact before the scam happens if we can just tell people what to watch out for.
So interesting. I'd love to talk, as I said in the intro, about more tactics at a product level for where you begin, and how you begin to build these things to be as sort of fraud preventative as possible from day one. Joe, I want to go to you first from your perspective and pulse. And, looking across all of the journeys and all of the things and tactics that you see, is there a product launch or a feature or something you've seen in the last year that kind of combats fraud that you're particularly impressed with?
Yes, yeah, there are a few. I mean, as we've seen AI develop, we've seen the sophistication in the attacks develop hand in hand, and hence the rise. So the preventative measures never quite match up to the attacks, but they are developing at a very fast rate, and we hope they go further. But yeah, a few we've seen have been a very recent one, which was impressive, was from Metro Bank, called Ask Silver. So Ask Silver, they partnered up with them, and it's an AI tool trained to detect fraud. So you could upload a screenshot to WhatsApp. It's all done via WhatsApp, which is quite forward thinking because everyone's familiar with that and has that. Most people have that to hand, and they can say, is this your email? Is this your text? Is this your QR code? And they can very quickly verify that or not. And that's a great tool that's kind of really keeping up with the sort of phishing scams and kind of scams that are developing at a very fast rate. And then when it comes to kind of call verification as well, because obviously if you got an inbound call, you don't know that. Monzo took the lead in this, but Starling very quickly followed suit, where if you go into their app, you can then see this phone call is not coming from Monzo. So if you've got someone on the other line saying, hello, could you just give us your mother's maiden name and we can process this payment quickly, you can then very quickly have a look and say, no, this is not a legitimate phone call. You don't have to Google anything. So those are two very interesting features that I think are just kind of attempting to keep pace, and credit to them for developing at such a pace.
So interesting. And Tony, you also mentioned some of the things that you're thinking about at Charlie for this. Monica, I want to come to you, maybe just to start laying it out at that product level. I mean, how do you think about building kind of fraud prevention from day one? It's got to be so difficult, right? Because it's changing all the time.
Yes, it's changing all the time, but I think it comes back to the basics, right? Going back to the customer. And I think it's the understanding whether we're building a specific feature for a certain type of customers, or if we're looking at the app holistically. But either way, we need to put ourselves in the, hey, who is using the app? And start thinking, hey, vulnerable customers. Because let's say in the case of Charlie, it's like we know it's people over 60. But in the case of the rest of the fintechs, you have like young people, not so young people, old people, people with disabilities, people that are perfectly fine but super busy and they just click whatever. Yeah. So I think it's a matter of, one, understanding that we are fighting organized crime. It's not just like someone trying to do something. It's like we're building banks. They are building the opposite on the other side, trying to scam, right? So it's organized crime, and we're here to protect our customers. So it's always start with identifying who our customers are, and then what are the potential vulnerable points in the journey that may affect them. Starting point.
Yeah, that makes sense. Tony, I mean, does that resonate with you? How do you guys think about it?
Yeah, absolutely. I think when you start and you zero in on the particular customer, and we do have the fortune of only being focused on the 60 plus, and they are particularly vulnerable in unique ways. So one example, if we think that many banks, their default posture is to, if the bank is a house, that all the doors and windows are open, money movement, like it's important to reduce friction in money movement. And we've taken the exact opposite task, is that we want to default to all the windows and doors being closed. We have a feature called sleep mode, where the card goes to sleep, the Charlie debit card goes to sleep when you go to sleep, and you can schedule it, or you can just leave your card asleep the whole time, and we won't let any transactions through except for recurring bills. And our customers love this, because what it means is that the card is just locked down, and they wake up their card when they're when they're in line to check out at the grocery store. They swipe their card, finish the transaction, and then put their card to sleep again, and it's total peace of mind for them. And that's a feature that just emerged from realizing, our customers are probably not out clubbing on a Friday night, so it's probably safe to just shut the card down. And we realized that there are many other use cases for our customers in that case.
Just on that as well, I think such a popular feature from the challenger banks has always been that freeze card option. And even if you're 95% sure you've left the card under the sofa, it's still just, you don't know. And it's that reassurance that just, okay, well, I'm pretty sure, but I'm just going to make absolute certain that no one's using that card.
Such a feel better thing, isn't it?
Exactly.
For any customer.
Yes, definitely. And another thing to add on top of that is many of the fintechs, they started as prepaid cards. And that gives people reassurance, right? Because you only put what you're going to spend. So it's like, yes, you freeze it, but in case that you forgot to freeze it, you have the peace of mind that it's like only if anything happens, it's only that amount of money that may be lost. On the other side, if you have like your bank card with your salary, your savings, or your credit card, then the stress is way bigger because you're also always thinking like, ooh, that's a bigger loss.
Yeah, absolutely. And what I find very interesting here is the prevention, the detection versus education. So the types of fraud I think that both of you are talking about that I find interesting is it sounds more psychological. And the types of fraud that I think we see in the stats are also more psychological in that sense, right? So romance being a good example, or, as you said, Monica, like account takeovers, for example, someone really trying to convince a user to hand over that information. I think one of the things, Tony, you were saying is there's a hell of a lot of education that you can do to be able to do that. But is it the case that, can education really ever prevent customers from trusting the wrong people? Is it an education problem, in fact? I mean, is it a problem where the more digital we are as people, the more we need to understand, the burden being on the user, on the customer, actually to kind of get this? Because I need to be savvy more. Yes, there is a burden of responsibility on the financial institution to help me, for sure. But is there a point where I kind of need to get this, or am I maybe being too harsh?
I think certainly the customer has to bear some responsibility here. It is their financial life. It is their financial health. I think with our customers, we also think of it as it's a family affair, where we need to figure out intelligent ways to make sure that trusted loved ones are also part of that protective shell. As an example, we have a feature called Fraud Alert Copilot, where you can add my mom is the first Charlie customer, and she added me to her Copilot. So anytime there's suspicious activity detected on a Charlie account, we alert all of the family members that are added to your account as well, just so you have another set of eyes. And it's nothing sensitive, nothing specific about a particular transaction, but it's just a way to expand the responsibility and scope because it is such a complex and evolving problem. You really can't expect an individual to have the total onus on themselves.
Totally.
I think it's a shared responsibility because let's say I see customers in Latin America, UK, and Asia, because I lived in the three parts, right? So when I think about people in LATAM or people in Asia, many of them, while they are digital savvy, if you look at the mass of the population, they are savvy when it comes to how to use a phone and Facebook and TikTok, but that's it. So it is important that we as institutions kind of like build the ecosystem on their behalf so that then they can avoid being scammed, let's say, or lose money. And part of that, it's hey, we think always bank first, app first. But no, maybe it's like TikTok first. Start educating people in the channels that they see and that they trust at the same time. And maybe it's as easy, for example, in Tony's example, something that it's like they've productized the experience. But in other cases, it's just like, hey, for example, with my family, I know I've told them, they've told me, hey, if I texted that I need money, it's like we have a protocol. So just like years ago, we were saying like, hey, money is a taboo and we don't talk about money because as a society, we don't talk much. Then I think we need to start talking about fraud as a thing when we talk about money, because it is a thing. So it's kind of a shared responsibility, even like as a society, not just as banks, just to start talking about it.
Absolutely. And it doesn't mean just because you are digitally savvy, it doesn't mean to say you're not going to fall from this. In fact, you could argue the opposite. In fact, like you hear people falling for scams because they're just so quick at responding. As you're saying, they're on the channel already, right? They're on it. So they're there and they're just like, yep, fine, done. Oh, wait, what did I do again?
Yeah,
You know?
I think that's where some sort of positive friction comes into it. And actually, whether it's just adding additional steps to make them really think, or adding cautionary advice, or flagging things up. This looks suspicious, or this could be suspicious, or this doesn't match, is a very good thing. And you should really over-index on that, because we spent so much time making things quick, but actually it can. You could be quite excited. You could have a piece of adrenaline. You could say, "Oh, I'm getting a refund. I've actually almost gone down that track before," and you're so excited, and you're not even thinking rationally at all, and you're trying to claim that back. And all it takes is that one additional red flag to say, "This doesn't look right. This URL doesn't match," or "Are you sure this is the right caller?" To take a breather and say, "Oh, of course it's a scam."
I think particularly if customers think that they can't get scammed, we see a lot of folks that just are so confident that they know what a scam looks like, or they've been scammed once and they're like, now I know what scams are, so I'm totally fine, and that just makes them that much more vulnerable to the next scam that comes along.
Yeah, right. There's no way that this isn't a real person. I'm totally confident there's a real person.
Right.
Yeah,
exactly.
Absolutely. Yeah. I'd love to talk a little bit about the fallout, right? Because, there's trying to stop it from happening. And then, in a lot of times, unfortunately, it does happen. There's an interesting stat here that says that 3 in 5, so it's roughly 60% of fraud victims have struggled with their mental health in the aftermath of a crime. And of course, as a financial institution, there's all that complexity around, well, who foots the bill? And managing that process must just be so complicated and difficult. I mean, how do you deal with that, Monica, for example? How do you manage that fallout and deciding how to pay and who to pay?
That's a big question, right? Because
maybe too big.
It's a big question, but let's say deciding who to pay, what to pay, it depends on the type of fraud as well. So let's say if it's a card payment, we know there's a protocol. That's it. There's the protocol that the schemes have,
right,
that then we know, and customers also use card payments because they know they are protected by the schemes. So that's kind of like one type. But then if you were to say QR payments here in Asia, they are quite big, but you don't really see fraud when it comes to QR payments. It's small amounts and you need to have your device. So that's not like a big deal. But it's like transfers out, same account to account, like all the transfers out, that becomes an issue, especially when then we say, hey, if the transfer is not to another bank account within the same country, but what if it was to a different country? And then that becomes like a bigger problem. So there's like two sides. Once fraud happens, I think it's the due diligence and processes that we need to have in place. But then, like you say, people, well, it's a crime, right? So people do go through financial stress and mental stress. So I think we as fintechs and banks need to do a better job at managing that customer experience, acknowledging the fact that it's extremely stressful for the person. I think we do acknowledge that it's extremely stressful, but if I were to say, hey, I was walking down the street and somebody grabbed my bag, you're like, oh my God, are you okay? This is like a traumatic experience. It's the same, but it's online. And I think we can do better in treating customers better through that traumatic experience.
Tony, what do you think?
Yeah, absolutely. In the early days of Charlie, spoke to a couple of hundred retirees just as part of customer discovery, just trying to get to know the audience a little bit better. Almost every one of them had lost between hundreds and thousands of dollars to a scam at some point, and very few of them told anybody about it. They didn't tell their kids about it because they didn't want their kids to think that now they couldn't handle their finances, and now their kids are involved in their lives in a way that they're just not quite ready to think about yet. And they didn't want to tell the authorities because they were worried that there was going to be some kind of consequences. And so a lot of the work that we think that is to be done at Charlie is to help people understand that journey of what to do, to understand they're not alone, to understand what are the safe ways to report fraud, and to try and to begin the recovery process, because it's that sense of shame and kind of keeping it to yourself that is one of the most devastating aspects of this, and what makes this audience like such a vulnerable target is that everybody thinks they're alone, and nobody is. Like, we're all under attack all the time, and we're trying to, without without making people feel paranoid, we are trying to find elegant ways to help people understand that they're not alone and that they have mechanisms in place to recover from when they are defrauded.
That's a very good point, because let's say with any quote unquote bad experience, many of us think like, oh, I thought that could never happen to me. And then it happened and you have that shame. But then it's happening to all of us, but then we are kind of suffering in silence. So it's like removing the shame and then be able to talk about it openly as well, and have the support system, because it's like, well, I can tell you about it, and then we're just going to be like sad about it or anxious about it. But to have the support systems to help people go through the situation.
Yeah, 100%, and how fintechs can help do that. All right, that's a good point to take a break.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alicabank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Is anyone out there?
Another salesperson enduring the endless search. Exhausting. If you want to get right to the right conversations, you need LinkedIn Sales Navigator. Whether you're looking for new leads or strengthening existing relationships at your top accounts, get right to the right conversations with LinkedIn Sales Navigator. Try LinkedIn Sales Navigator now with a free 60-day trial at linkedin.com/trial. That's linkedin.com/trial.
Terms and conditions apply!
Welcome back to FinTech Insider, where we're discussing what fintechs are doing at a product level to combat fraud. It is, of course, time to talk about AI and UX and how we can use some of these tools to fight crime. So I think, as we were saying earlier, we get the same tools that they get. We have the same ability in some ways to counter it, although I'm sure sometimes it does feel a bit like a losing battle. But actually, let's just talk about this. I mean, Tony, for example, with AI, with those spoofed identities you were talking about, like Elon Musk and, other celebrities, for example, do you feel that you have the tools available to fight that? Or is the kind of anti-fraud industry somehow still trying to play catch up?
This is the daily war that we live in. It's a constant escalation between us and the fraudsters. But we're absolutely deploying AI in a bunch of different ways to try to more intelligently get ahead of the scammers. One example is like when we detect suspicious activity on an account, we've introduced this feature called Speed Bump, where when you add a new payee to your account and we think that payee might not be legitimate, we alert you on all of your channels. We say, are you sure you knew who this person is? And we kind of in situ education to that customer. And then we apply a 6-hour delay on that outbound money. And we give the customer an opportunity to undo it. And this we have found is just an example of like intelligent friction that we add into the system when we think something might be awry. And AI is allowing us to just get smarter and smarter about targeting that kind of intelligent friction so that we don't institute too much friction into the system. You don't want the bank to feel like you can't do anything. That's the other side of this, is if there's too much friction in the system, the customer is just going to frankly just like not bank with you anymore. So how does AI live in the background but also kind of introduce itself and intervene when it makes sense, I think is the dance that we're dancing right now.
It's so tough. It is a dance, right, Monica? You're constantly managing these trade-offs.
Yes, definitely. Because I think Tony raised a really good point that it's friction. How much friction that we protect the customers, but not too much that they are annoyed. And I think that's that balance. And probably, well, if anyone has got it like 100% right, it could be amazing to talk, right? But I think no one has. But I think it's the ways of working that we have within our institutions are important here, so that then we monitor the dance. We know we'll do something, they'll do something, and it's like a dance between our features, our systems, transaction monitoring, this, the other, and our customer experience, and basically the actual hard facts of how much fraud is happening or not. And it's just a constant monitoring. And just like with product, we iterate and we test and learn. We probably need to use the same approach with managing fraud. And actually, I would add to that, many product people always say customer is not the responsibility of product, customer obsession or customer care. It's the responsibility of everyone. So probably with fraud, we need to start thinking the same way. It's like fraud, it's not the responsibility of the fraud team. It's like we all need to start thinking fraud, and then across all the touch points and how we can improve it. And probably that's where not only ecosystem as a holistic ecosystem, but even within each of our institutions, holistic ecosystem within all our functions. And just dance the dance.
This all sounds very expensive. I mean, I'm thinking about it. There are so many different things as a fintech you have to do to, maintain your product and grow and evolve your product, on top of having to maintain a constant dance for this, developing UX, constantly thinking about it. Just feels like a burden, a huge financial burden on fintechs. I mean, is that something certainly is both of you are looking to the future and thinking, my gosh, this is getting worse. Okay, I'm going to have to be putting more and more resources and more finances into doing this. Does that somehow change the game, or is that like not a consideration?
Well, from my perspective, it's more of most of the fintechs as such, customer-facing fintechs, we are not the experts on fraud, but there's fintechs who specialize on that. And that's your transaction monitoring fintechs, just to give it the rough name. And then when we partner with them, basically they act as our partner, right? And they are the ones that can allow us to prevent, detect, and mitigate like the whole end-to-end journey. Of course, it's expensive, but it's more expensive not to have them. But it's just part of operating the bank. We need to have fraud systems in place.
Just got to do it.
Yeah,
I totally agree with that sort of collective effort as well. It is going to be costly, but it's necessary to do. And in order to win that sort of arms race that Tony called out earlier, it does take education, but also using the best technology available at the moment. And I think Chase did something very good, I think, which was to block anything considered risky from Zelle. They kind of did a deep dive into Zelle because they found a lot of the scams predominantly, or the ratio was huge coming from Zelle because of social media scams. So they put a lot of effort into analyzing behavior or commonly used kind of scam methods through Zelle, so that anything that comes through Zelle is kind of under detailed analysis, and a lot of them are blocked. Now, whether they've got that balance right, whether there are too many false positives, I don't know, because that can also cause real problems for people who really have just been called out for the wrong reasons. There are different kind of UX methods to solve there as well. It's a bit like when Monzo started closing accounts for suspicious activity, which was, probably on the whole, it was the right approach, but was the messaging good and not letting those people know what was going on? It's quite kind of a similar thing going on there.
Yeah, we've seen similar kind of things with crypto, right? Just doing blanket bans on any kind of transaction to a crypto exchange as well.
Yeah,
Tony, how do you think about it?
Yeah, just to echo, I think a lot of the great points that Monica and Joe have made here is that we think about this in terms of this is the cost of doing business. It's just where we are right now, and so we don't think about this as we're not worried about it. If anything, I think we think that there's probably an opportunity with us and our partners that we've developed Charlie with to make the platform less expensive over time. I think because the AI, our deployment of AI is getting more intelligent and more individualized. And as you tailor the experience around each individual's unique risk profile, you can both create a better banking experience at the individual level, but also for those that are just inherently riskier as customers, I think you can get better at catching that earlier upfront and reducing the costs or potential costs around those customers as well. And so we think over the long haul, this is actually going to be a cost savings for us as AI evolves. But right now, yeah, I mean, it's definitely expensive to develop these tools, but we do think of it as part of just the cost of doing business.
I think it's very interesting because I suppose the AI flavor goes across all the products that you're developing and the way that your apps are engineered and stuff. So I suppose what you're saying is that, okay, maybe the overall cost of developing this application is going to go down in the future. So it's okay maybe that a certain chunk of, money needs to be spent on anti-fraud because the overall picture is actually really, really good.
I think that's right.
Yeah. And it's, I guess, not just about AI and fraud, but it's AI across all of the other stuff that you're doing. Maybe just to sort of focus a little bit on AI, a little bit, Monica. Like, how are you deploying? Are you deploying AI in any specific areas into the app that the customer sees?
At the moment, we're leveraging more on the fraud side, the AI that our partners are introducing, right? That's our biggest use case right now. But I think to add to that, probably most fintechs already have access to those tools, and their partners are the ones that are developing AI. We fintechs, we banks need to become AI savvy. Not only the use cases, but the tech behind it and the risks behind it, how to manage an AI organization as such. But in the meantime, there's some that are ahead of the game and they are already basically releasing all these features. So we can leverage those. And two easy wins is like, hey, speak with them. How is it that we can leverage? But then two is if we look at AI, basically it's the inputs are data, right? So whenever we build these fintechs, unless you have been around for 2 years, we built these before the world of AI. And yes, machine learning was here, but it wasn't the core. So if we think now about the data points that we saved as part of our development process back then, maybe we're like, oh, we don't need that. Oh, we don't need that. Just let's save that. Just don't save that in the database. But now if we think about like, hey, if we were to have more data points that we can start saving that can help these fraud engine machines, basically companies, then it seems like, oh, one extra field doesn't make a difference. But if it's like 1, 2, or 3 extra fields across all the hundreds of thousands of active users that we have, or that as a collective group of fintechs we have, then they can do a lot of much more to prevent and to see patterns and to see all the network effects. So I think it's also like leveraging the strengths of the ecosystem.
And I guess they want that data from you, I suppose, right? Because they want their models to be better. And I guess this is where being a fintech, it becomes almost an advantage, I guess, amongst some incumbent institutions, for example, who would, I'm not saying they don't do that. Of course they do it. Of course, they all have all sorts of different partners that they work with. But the agility, I think, that a fintech has is just much faster in being able to submit data. I mean, certainly something that's come up before on various other podcasts. We did a spotlight video a couple of months back about the issues with data sharing between financial institutions. And if you really boil it down to, what is the problem, it can come down to workflows. And a lack of either a willingness or, sometimes the regulations just don't allow it, right? It's just non-compliant to be sharing that kind of information in the way that you want. But I guess, you're all way more adept at doing it and can get the feedback much faster, right? Is that something you see as well, Tony?
Yeah, I mean, as you said, David, I think we have to be really careful about how we're using our data.
Yeah.
For us, I think the when you're looking across hundreds of thousands or millions of transactions, I think you can start to get smarter earlier about detecting when new patterns of fraud are emerging. And this is something I think we're now are with our partners, we're getting smarter together about developing better algorithms and getting ahead of the fraudsters here. But we tread into this water very carefully for sure, because it's certainly fraught.
Yeah, absolutely.
Yeah, just thinking about analyzing millions of transactions, MasterCard came to mind, and I think they have done a good job of, I think it's called Scan Protect, which I think came about a few years ago, but has really come into its own this last year, where it will monitor kind of behavioral analytics and really obviously has big data at its hands. So it's that thing of relying on large partners who have really have the knowledge and the experience and the data to their hands.
That's a good point. I mean, the schemes must be almost like the ultimate source of data in some ways, right? Like they must see so much that they can take action on. Okay, cool. I'd like to finish on a more positive note somehow. I mean, it can be a depressing topic. We've talked about all sorts of different tactics we can deploy to make it slightly less depressing. But if either of you were giving any advice to a fintech or someone thinking about building a fintech product, what would be that advice to stay ahead of fraudsters? We've been talking about partnering, for example, and making smart decisions. Is that maybe one of the most important things, Monica?
Yeah, I could say partnering with the experts so that then you can focus on your core. But at the same time, it's like partner with your customers. It's like go back to them and say like, understand them, talk to them, be like, hey, what are their concerns? What are they worried about? What are their gaps in terms of knowledge? And co-create the solutions with them. And then just like have the ways of working and the systems within the company so that then you constantly monitor how the whole, like we said a little bit ago, like the dance, dancing the dance, just monitor the dance between all your initiatives and customer and numbers and manage it.
Makes sense. Tony, what do you think?
I love that sentiment. And we think we obsess over our customers. I think knowing your customer, their unique needs, and I think don't overestimate how protected your customers are. Everyone's vulnerable, and the less vulnerable a customer thinks they are, as we discussed, the more likely they are to fall into a scam. But to keep it on a positive note, I would say also don't underestimate your customer's capacity to learn, to become more vigilant, to get better at recognizing scams before they happen, and to become part of the fight. I think we are all in this together, and that shared responsibility. I've been dazzled by how smart our customers have become over time at recognizing scams before they happen, and that's been one of the most encouraging things about running Charlie.
That's very cool. I mean, Joe, any last thoughts?
Yeah, I think just to build on that one, I think we've already come such a long way. If we were having this conversation 10 years ago, I think there wouldn't be nearly as much information and people would be more vulnerable in a way. And there is a lot to be scared about now that's changed from then, particularly around Gen AI and as Monica called out, these sort of groups that it's organized crime. But I think if you stick to some of the basics as well around friction by design and sort of relentless education, I think that can do a lot of the work that people are looking to AI to do, but actually this can do a lot of the heavy lifting.
Awesome. Ending on a nice positive note. Well, so that wraps up today's discussion. Thank you so much for joining me, all of you. Where can people find out more about you? Joe?
On LinkedIn, just Joe Colchester on LinkedIn.
Nice. And Tony?
Same, LinkedIn, Tony Brancato, or to learn about Charlie at charlie.com.
Awesome. And Monica?
Same, obviously, LinkedIn, but I also have a YouTube channel, same, under my name. And then you can find us on bigpayme.com.
Awesome. And you can find me also on LinkedIn at DavidBG. Thanks for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts@11fs.com. Thanks very much and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.